good morning, everybody. It is Friday, May the 3rd, coming on 6 a.m., and it is Jobs Friday. Jobs Friday, and Jobs Friday is significant. Not going to waste your time because it's been an amazing week. Everybody wants the weekend to begin. 0-day traders, I wish you the best of luck today. Hope it all works out for you. Way too much effort after having gone through the two biggest weeks of earnings. And in my opinion, my personal opinion, earnings are finished. It's over. This morning, or actually the closing bell after Apple reported, it felt like when you finish finals week when you're in college, it was just 300-pound gorilla off my back, finally. And yeah, I am going to go relax. So anyway, I'll stick with you here. May 2, yesterday, zigzaggy, like I said. Keith, dude, I was giving you just a little heads up there about, hey, man, just be careful. We're not in the buy the dip mode. But I knew we would get a green close. That was my opinion, having had the two red closes. You crushed it. Congratulations. And it's not because you took a chance. It's not because you took a risk. You are very, very well educated, and you've taken on all that I have shared with you and used it to your advantage. And I do nothing but congratulate you on that. That was a massive, enormous credit spread that you had yesterday. Congratulations. Deserve every single bit of congratulations to you. Green Day, plus 45 on the close, plus 15 from the open, 62-point range. Green for the month. We are green for the month. We closed above 50.29. This is the first time that the SPX has been green for the month since going back to when it ended in March. April never once was green, ever. Never, ever, 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 ever. So I bring you on here to the summary of today. Today, I have shared with you the spread over in the room. If you want to go and take advantage of it, by all means, it is there, and my reasoning behind it is very well explained. Buy the 52.20 calls, sell the 51.55 calls. As of right now, you're getting 30%. You're getting a little bit better than $1. Why am I calling this out? Because today at 51.1484, that would be 3 consecutive plus 1% days on the SPX. Shared with you the data on that it's just not something that comes around and is given out for free. Happened in November, FOMC day, Thursday, and then Jobs Friday. Happened in February 2023. As we placed in the top off the FOMC meeting, and then the Jobs Friday was the Friday subsequently after having 3 consecutive plus 1% days, and the Jobs Friday shit itself on the bed, minus 1%, and we began that decline in February, minus 10%, 9.7%, something like that, into the March lows. So plus 1% 2 days in a row, that's what I'm looking for. However, jobs, April 5 last month, remember me talking about how it had been 17 sessions since we had had a plus 1% day. Jobs Friday provided that plus 1% day. That number is wrong. That needs to be red and the color yellow, because that's up in the 5200s. Plus 1% April 5, jobs. Come over here onto March 8th, jobs, minus 1%, failed. Did not get minus 1%. Did break the bottom edge, but we did not get minus 1%. Come on to the February jobs, plus 1%. Come on to the January jobs, boom, not plus 1%, just missed plus 1%, but did break the upper edge. Didn't have too much plus 1%, minus 1% in the beginning of the year. And then, as you guys remember, January 8th, after we bottomed, which was Jobs Friday, 46.82, that was when the algo kicked in this year. So again, with it being plus 1%, and now today having been a third plus 1% day, after you have thrown every single thing you can throw at this, Google, Tesla, Amazon, Apple, Meta, Microsoft, AMD, everything has been thrown at this except NVIDIA. And AMD and SMCI pretty much give you a prelude of what is going to occur with NVIDIA when they report later in the month when it comes to November. QQQ, Green Day, after two enormous big red days. And now you have your gap up. Your gap up at the moment is at 429.73, shy of plus 1%, but that's where it is. We'll get over to that in a second. IWM, volatility heaven over here on IWM. Plus 1%, plus 1%, minus 1%, plus 1%, plus 1%, minus 1%, minus 1%. Didn't get anything on that on April 19th. Didn't get a plus 1%, didn't get a minus 1%, but just hung inside that range. But volatility is all over this. And I want you to take note here. 200, 200, 200, keeps tagging 200 and failing at 200. So you zero DTE traders, guess what you're looking for? You are hoping and praying that you get a visit above 200 to get into the 200 puts. Although you do have, a relative advantage with that 199.40 being there. So take it very light. So anyway, I will take you on to the charts real quick here. SPX, see nothing whatsoever at all to raise any alarm bells because of Apple. Nothing. Come over onto the QQQ and nope, wrong way. Come over onto QQQ. And again, I see nothing whatsoever raising any kind of alarm bells, anything whatsoever. Apple, like I emailed out yesterday after the close, after they reported, I am going to get into Apple puts today. I'm going to be looking at July 19th. I will also have September on my mind, but I will also be looking at the June. And here's my little bit of caution, okay? After the all-time highs over here in December, which were fractionally above the old all-time highs from back in June or July, whatever it was, 4 red months in a row, you'd be an absolute fucking gambler to think that you're going to get a 5th red month in a row. What we mean by a 5th red month is ending the month of May below 169. That is an enormous risk to be taking. However, showing the retracement from the all-time highs up there down to the lows that we placed last month, the 50 and the 61.8 retracements being at 181.73, 185.90, you come over onto Apple and you see right where you came to. Boom. 185.90, 181.73. We came right up to 186.65. And we filled the 2 gaps that are the only 2 gaps that are up above over on Apple. And already, unfortunately, Apple has been fading away as the overnight session has been bringing it down. 186.65. We're down here at 183. So what I am going to be looking at is the June 21, the June 19th, and the September 20th. And I'm looking at strikes from 170 all the way up to 185. I don't know what the pricing is. When I see the pricing, then I can make a determination and a decision as to whether or not the July is better than the June, or like we had with Google a week ago, I went ahead and took both of them because I knew both of them would work, and both of them did work. But I'll also have the September ones on mind because I'm looking at the bigger, broader picture of everything, and I'm also trying to take into consideration the ability that we could go up today. And I don't need anybody sitting there panicking that, oh my God, we're going up. What's happening? Because as you come over and you go through everything that you have, doing a trade alert today on Apple would be the 27th 32 trade alert that's been issued. The last 4 were end of last week. The JP Morgan 190 puts, they hit 295 yesterday, better than 30%. The Google 160 puts, July and the June, both of them, call it 100% on the Julys, over 100% on the June 21s. The July 19th QQQ 420 puts from a week ago, like I shared, boom, almost 50% on those as we got our decline. So This would be trade number 27. The one, like you remember, the one getting in front of that JP Morgan, as we shared it in detail, never worked. From the very first day, it never worked. It's 26 alerts. 25 of them have been better than expected. One of them didn't work. Apple, that'll be my number 27. So I leave you over here with the futures. Futures, as we're looking at the RTY. RTY right up here at that rejection 2032.30 level, right up on it overnight, over there on the FOMC, over here on Monday, fractionally to it on Tuesday and Thursday last week. It's pretty damn clear. Come over onto the YM, the Dow, your highs from last week, back on April 24th. And yes, obviously, because of Apple, this is looking very, very, very much as if it is turning over bullish. And again, we very well could be, because we are going into that new moon window. Here we are right up at the second resistance level, having broken over the resistance level over here, which you guys already know, but that doesn't matter. Nobody trades the YM because everybody likes to trade the NQ, and NQ is right on that rejection line, 1773.50. Rejection, 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 rejection. Oh, here we got a trap. This is where our QQQ met that 433.50. And everybody knows, again, because you have thrown everything at this now other than NVIDIA. And you bring it over to the ES. And the ES over here, your 51.44.50 area, being roughly around that 51.15. Here we are trending just below the FOMC highs. And yeah, it looks a little bit better, but still 5-day below the 10-day, 10-day below the 20-day, 20-day below the 50-day. Nothing at all to change anything whatsoever. So the only caution in the wind to throw out there is, where are you, Big Daddy? The VIX. Fridays like to crush the VIX. They like to send the VIX to the downside. They love to send the VIX down on Fridays, and Mondays, the VIX always gaps up. Well, we are coming into that treacherous 1451, 1410 area where we lose it, absolutely zero question whatsoever. You're going to see 1339. And that 1339 has continued for months and months and months to be the big alarm to go in and start looking at those further dated out QQQ, SPY, SPX puts 2, 3, 6 months out. And having shared everything I can possibly throw at this as to where we are, I can't really give you anything better that you need to on a Friday other than have a great weekend, enjoy yourselves, and hell, man, when you go out this weekend, if you're at a nice restaurant, leave a tip. But when you go to a place that really needs it, Denny's, Sizzler, people that need it, leave a big tip. You know what to do. Pay it forward.